The biggest potential win, talking about win streaks, for the wealthy in the GOP's one big, beautiful bill, a much more generous estate tax. And guess who's here? Guess who's here? Who knows more about this stuff than anybody else? Robert Frank is here. Good morning, sir.
Good morning, Andy.
What's going to happen?
Good to see you. Well, right now, the state of play that you could call it the slow death of the death tax. Now, as part of the 2017 tax cuts, you might remember the estate tax was dramatically reduced. So instead of taxing estates worth $5.5 million or more, the 2017 tax cuts doubled that exemption to $11 million. So estates worth up to $11 million or couples with less than $22 million, they owe no estate tax. That benefit was, of course, set to expire with the other provisions at the end of this year. The House, though, not only extending that cut, but making it even more generous. So under the current plan, the exemption is going to jump to $15 million or $30 million for couples. It would be made permanent, and it would be indexed for inflation. The permanent part is the most important. So this is going to at least rise $1 million a year, that exemption, without any expiration. With such a high exemption, of course, the estate tax is a lot less effective. The wealth of the top 1% has soared by over 75% since 2017. Meanwhile, the number of estates paying the estate tax is down 27%. Only 4,000 people paid the estate tax in the most recent year. It only raises about $20 billion in revenue, back where it was in 2007. Back then, the exemption was $2 million. Over 16,000 estates paid the tax. Now, for a full analysis of all the new tax changes that affect high earners, you can check out the Inside Wealth newsletter. That's cnbc.com/InsideWealth, cnbc.com/InsideWealth, or just scan that QR code.
It's huge news. I mean, there were a lot of planners who had told people this is going to snap back. Like, you better get the money out the door now. So this will affect philanthropy. And what's the deal with the other philanthropy tax they're talking about? 5 or 10% or something?
Private foundation. But you make such a smart point, an important point about gifting, because everyone thought this was going to expire. So they said, well, the exemption's going to could go back down to 5. So give millions to your kids. So we saw front loading of gifts to kids that I think a lot of kids were It
became
beneficiaries of this, and now it's going to stop. And so that's been an interesting transfer of wealth that, at least for now, is, if this passes, is going to pause. Now, on the private foundation issue, which is one of the few tax hikes that affect the wealthy, it goes from 1% tax on investments to 5%. Now, you guys know just getting a 5% consistent low-risk return is not easy. I mean, it's easier today than it was years ago. But that's going to effectively reduce the investment returns of private foundations if they tax them at 5%. Now, that's for the biggest foundations, like the Gates Foundation, things like that. But that's less money for philanthropy, and that also affects.
I saw, different
people. Do you think that it's going to stick, that piece of it?
I do. So there was a big movement to repeal the estate tax. John Thune, who you had on the show a couple weeks ago, had a lot of support for repealing the tax altogether. What's interesting is the life insurance lobbied against a repeal, because a lot of rich people buy life insurance policies as a protection against paying the estate tax. And so they were basically saying, don't repeal it. And so you had this fight between John Thune and the wealthy families that wanted to repeal, the life insurance firms that didn't want to repeal.
That's fascinating.
And so what happened is you got this what the compromise was this, and I think that's why this is going to pass. You got permanency, and you've got an index for inflation. So now it's $30 million, and that's going to go up about $1 million a year in the coming years. But effectively, it means that very few people pay the estate tax. So no family farm that's going to be worth $30 million is going to be hurt by this.
What about all the tax lawyers and accountants who actually had made a fortune creating all of these crazy trusts to move all this money around?
And they still will, because the estate tax is still in place. And so, basically, if you're a family worth $100 million, $200 billion, this tax matters in that you have to do planning. It doesn't mean you have to pay it. I mean, Garrett Cohn famously saying only morons pay the estate tax. And that's because if you're worth more than $30 million, you can afford the best trusted estates attorneys who can structure things.
You don't think there'll be pushback on the foundation piece, though? That's 5%?
Of course there'll be pushback.
And do you think that'll stick? That part seems maybe a little bit more.
It depends on where the Senate goes. We haven't really heard from the Senate on that. We know, look, your terrific interview with Paul Tudor Jones, who said, why are we attacking nonprofits? They are so important in this country. Foundations do a lot, especially as government is cutting. Foundations need to step in. I just don't know in this political sort of anti-woke environment whether that's going to fly.
That's like the old line, too, like, that's where the money is.
That's where the money is, exactly.
That's where the money is. Robert, always good to see you.
Thank you, guys.
On
Great
all
to
these
see you.
things.